Hello, welcome to the market opening bell for Tuesday, July 15th. Your 10-minute guide to the stock market. China's import and export data for last month exceeded expectations, boosting Hong Kong stocks. The Hang Seng Index opened 39 points lower, hitting a daily low of 24,097 before rebounding. It peaked at 24,268 in the early afternoon, up 128 points at its highest, and closed at 24,203, up 63 points or 0.3%. The Hang Seng China Enterprises Index rose 45 points or 0.5% to 8,733, while the Hang Seng Tech Index gained 36 points or 0.7% to 5,284. Total market turnover was 210.3 billion Hong Kong dollars, down from 323.9 billion Hong Kong dollars from the previous day. Southbound funds recorded a net purchase of $8.243 billion in Hong Kong stocks, with notable net buys including Meituan, 1.222 billion, Alibaba, 859 million, SMIC, 299 million, Innovent Biologics, 160 million, and Haotian International Construction Investment, 106 million. Net sales included Laopu Gold, 364 million, and Healthway, 129 million. According to statistics, Southbound funds have net bought SMIC for 17 consecutive days, totaling $9.828 billion. Meituan for 6 consecutive days, totaling $5.353 billion, while net selling Xiaomi for 3 consecutive days, totaling $1.182 billion, and Tencent for 3 consecutive days, totaling $989 million. Technically, the Hang Seng Index remains in a narrow range, with resistance still at 24,500. Notably, the 10-day and 20-day moving averages are at 24,058 and 24,002 respectively. A break below 24,000 could see both moving averages breached. Mainland Chinese markets showed mixed performance with reduced trading volume. The Shanghai Composite Index closed at 3,519, up 9 points or 0.3%, while the Shenzhen Component Index fell 12 points or 0.1% to 10,684. Combined turnover for Shanghai and Shenzhen markets was 1.4587 trillion yuan, down 253.3 billion yuan from the previous day. The renminbi central parity rate was set at 7.1491 against the US dollar, down 16 pips from last Friday. In June, China's US dollar-denominated exports grew 5.8% year-on-year, beating expectations of 5.1%, while imports rose 1.1%, slightly below the expected 1.4%. The trade surplus reached 114.77 billion US dollars, surpassing forecasts of 111.45 billion US dollars. In the first half of the year, China's total trade with the US was 2.08 trillion yuan, down 9.3% year-on-year, with exports at 1.55 trillion yuan, down 9.9%, and imports at 530.35 billion yuan, down 7.7%. Affected by the so-called US reciprocal tariffs, China-US trade shifted from year-on-year growth in Q1 to a 20.8% decline in Q2. Recent positive progress in Geneva and London trade talks has led to recovery in China-US trade, with June's trade value rising to over 350 billion yuan from less than 300 billion in May, significantly narrowing the year-on-year decline. The People's Bank of China reported that renminbi loans increased by 12.92 trillion yuan in the first half of the year, based on the first 5 months increase of 10.68 trillion yuan. June alone saw an additional 2.24 trillion yuan in new loans, far exceeding expectations of 1.8 trillion yuan and up 1.62 trillion yuan from May's 620 billion. The total social financing scale for the first half was 22.83 trillion yuan, up 4.74 trillion yuan from the same period last year. June's social financing scale reached 4.2 trillion yuan, surpassing expectations of 3.65 trillion and up 1.91 trillion yuan from May's 2.29 trillion. As of the end of June, broad money M2 grew 8.3% year-on-year, exceeding market expectations. Today, China will release its three key drivers economic data. June retail sales are expected to grow 5.2% year-on-year, previously 6.4%. June industrial output is projected to rise 5.6% versus previously 5.8%. First half fixed asset investment is forecasted to grow 3.6% versus first 5 months at 3.7%. June urban unemployment is expected at 5%, unchanged. And Q2 GDP is projected to grow 5.1% versus Q1 at 5.4%. Coal stocks rose collectively, with China's Shenhua up 5.2% despite issuing a profit warning. The group expects first half 2025 shareholder profit to be between 25.6 billion and 27.6 billion yuan, down 15.8% to 21.9% year-on-year, mainly due to lower coal sales volume and average selling prices, impacting coal segment profits. The stock's rise is likely driven by heightened geopolitical uncertainty and ongoing tariff disputes, coupled with demand for shareholder returns in a low-yield environment, making high-dividend coal stocks attractive. Fundamentally, coal prices have fallen more than expected in 2025 due to oversupply, with over half of the industry's companies reporting losses. Coal prices continue to seek a bottom, and the sector's dividend appeal outweighs its cyclical nature. Stable assets and ample cash flow ensure coal companies can maintain high dividends. Following China National Building Materials positive profit alert, China Resources Building Materials Technology also issued a positive alert, expecting an 80% to 90% profit increase for the 6 months ending June, driven by higher cement product sales prices and lower costs, boosting gross profit and margin. Other positive profit alerts include Shandong Gold and China's shipbuilding industry. Shandong Gold expects first half 2025 net profit attributable to shareholders to be 2.55 billion yuan to 3.05 billion yuan, up 1.17 billion to 1.67 billion yuan, or 84.3% to 120.5% year-on-year. China's shipbuilding industry anticipates net profit for the 6 months ending June to be between 460 million yuan and 540 million yuan, up 213.3% to 267.7% year-on-year, driven by stable ship product revenue, improved production efficiency, better gross margins, strong performance from joint ventures, and increased investment income from high dividends by associated companies. US President Trump continues to pressure countries on tariff issues, announcing a 30% tariff on Europe and Mexico starting next month and threatening a 100% secondary tariff on Russia unless it reaches a ceasefire agreement with Ukraine within 50 days. Market reactions were mild, with the Dow initially falling but later rising, closing up 88 points at 44,459. The Nasdaq rose 0.3% to a new record high of 20,640, and the S&P 500 gained 0.14% to 6,268. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, rose 53 points or 0.7% to 7,490. Investors are optimistic about Tesla, potentially investing in CEO Elon Musk's AI startup XAI, boosting Tesla's stock by 1.1%. Nvidia fell 0.5%. Meta CEO Mark Zuckerberg announced the company will invest hundreds of billions of dollars to build superintelligence to advance AI development, lifting Meta stock by 0.5%. Apple dropped 1.2% with its market value evaporating by over 640 billion US dollars this year, mainly due to delays in launching AI features. Major banks, including JP Morgan, will begin reporting earnings today. Investors should also monitor tensions between the Trump administration and the Federal Reserve. White House officials stated that Trump could fire Fed Chair Powell if there is just cause. Our stock pick today is Livzon Pharmaceutical, stock code 1513. Livzon Pharmaceutical actively responds to China's innovation-driven development strategy, steadfastly implementing a dual-driven approach of independent R&D plus business development. The company focuses on innovative drugs plus high-barrier complex preparations as its core strategy, targeting unmet clinical needs, expanding product lines in its dominant fields, and exploring new accessible areas. The group has established a comprehensive product portfolio in key areas such as gastroenterology, assisted reproduction, and neuropsychiatry, while actively expanding and strengthening its presence in chronic disease areas like metabolic, anti-infective, and cardiovascular diseases to enrich its R&D pipeline and consolidate its platform advantages. In the gastrointestinal field, the group's innovative potassium competitive acid blocker product JP1366 tablets has officially entered phase 3 clinical trials, and JP1366 for injection has been approved for clinical trials, further enhancing the gastrointestinal R&D pipeline. In assisted reproduction, the new indication for triptorelin acetate microspheres for injection, endometriosis has been approved for market launch, and recombinant human folitropin alpha solution for injection was submitted for market approval in late January 2025 and accepted. In the neuropsychiatry field, aripiprazole microspheres for injection applied for production in 2023 successfully submitted supplementary materials last year and is planned for market approval in the first half of 2025. Injectable aripiprazole has completed bioequivalence trials, and polyperidone palmitate injection is undergoing BE trials, both planned for market application in 2025. In the autoimmune field, the recombinant anti-human IL-17A/F humanized monoclonal antibody injection has completed phase 3 patient enrollment for psoriasis and ankylosing spondylitis indications with plans for market application in 2025. In the metabolic field, the semaglutide injection for type 2 diabetes has been accepted for market approval, and the weight loss indication has completed phase 3 patient enrollment. In 2024, the group's overseas sales revenue from drug preparation products grew by 65.98% year-on-year. In the assisted reproduction field, cetrorelix acetate for injection was approved by the US FDA in 2024, marking international recognition of Livzon's products. The group recently announced the acquisition of 64.81% stake in Vietnam's IMP company, a pharmaceutical company engaged in the R&D, production, and sales of drugs, primarily antibiotics and cardiovascular medications. The group believes this acquisition lays a solid foundation for further expanding its overseas market, supporting its long-term strategy for internationalization and sustainable development in the pharmaceutical sector. As of December 31st, 2024, the group's R&D pipeline includes 45 preparation product projects, with 23 being innovative drugs, high barrier complex drug preparations, or high clinical value products. Recommended buy price 30.5 Hong Kong dollars, target price $32.5, stop loss $29.4. I do not hold the aforementioned stock.